Taking a look at company news flow out today, quite a fair bit keeping things interesting this time of the year. Australian Competition Commission giving the green light for Aspen's taking over of Sigma, provided that it does give up some of his products. What have you made of that news flow?
Yeah, I think, like you said, I think a lot of people expecting it would be quiet over the last couple of days, and it's been anything but. Lots of corporate activity out. With regards to Aspen's news, I think it's good for the company. They've managed to get finality on the deal, and they can go ahead. So it's been a good week for them. They did well in the ARV tender. I think they got about 40% of that tender, and the products that they will need to dispose of in that acquisition are pretty small. Good news for Aspen.
Of course, making strides at a time where we've had Adcock Ingram coming under quite a bit of pressure. It's now asking Treasury to explain exactly how it allocated points to its rivals in the awarding of those ARV tenders earlier this week. But chatting to Simon Brown of Standard Bank this morning, he was saying that even if this does swing in Adcock Ingram's favour, he doesn't see it changing the picture very much when it comes to Adcock Ingram if you're stacking it up against the likes of an Aspen.
Yeah, I think it's too late for them to cry over any spilt milk. I don't think the results of the tenders are going to be retroactively changed. And it's been well known over a couple of months, probably the best part of 12 to 18 months, that Adcock Ingram is slowly losing market share to the likes of Pro and Aspen. I think maybe in its life under Tiger Brands, it wasn't maybe as focused as it would be, and I'm sure all these events that have transpired over the last couple of weeks will sharpen their focus up strategically. The business is well placed, generates lots of cash flow, very strong balance sheet, no gearing, so it definitely has the platform to go out there, do acquisitions, expand into regions where it hasn't ventured before. If you just look at the geographical footprint between Aspen and Adcock Ingram, Ingram does pretty much all of its business within South Africa, whereas Aspen is pretty much the opposite. And
in terms of organic growth, I mean, is that off the table just yet? Is it a matter of strategically the acquisitive route being the route to take for a player like Adcock right now?
Look, I think South Africa is a fairly mature market, and if you're a sizable player like Adcock Ingram is, then the growth opportunities in South Africa are quite limited. As we've looked at the sector, we prefer the likes of a MediPro, where they're not firing on all four cylinders. They're losing money at their manufacturing plants, but there's every possibility that they will reverse. They've got a small piece of the pie, and that can only grow over time. So that's where we focused our intentions.
Well, it's all about value add, isn't it? And what business structure makes the most business sense moving forward. For RMB, that looks to be buying FirstRand's stake in Outsurance for 3.75 billion rand, and then separating its insurance and banking arms.
Yeah, it was quite a complicated announcement, and there are lots of moving parts to it. But I guess it's part of a process. We're not at the end point yet, just to the final deals of the final terms of the deal. Essentially, RMB will just have it'll be split into two different operations. It'll have a pure banking operation, a holding in a pure banking operation, which will be First National Bank. They'll have a 34% stake in that, and then of course there'll be RMI, which will house their interests in Discovery, Outsurance, and MMI. We saw the share price of RMH rally today, and I think that's probably on the back of this transaction, and just a feeling that this has all been set up so that a foreign suitor can come in, and there's a cleaner path to take out FirstRand if that's the intention.
Let's take a look at that, because with the scuppered deal that we saw between HSBC and Nedbank, a lot of attention has been placed on South African banks as possible acquisition targets, and this isn't the only thing FirstRand has done over the recent week to make it look like a lucrative takeover target. We've also seen it be appointed as acting caretaker of a Zambian bank as well, and further entrenching its African footprint, where so many foreign investors want to be a big player in.
Yeah, look, I can't speak to FirstRand's actual African presence. I don't think it's that big. It's probably more an ongoing thing, right? I don't think any bank would buy them on a 2 or 3 year view for their presence in Africa. It's something that's going to manifest probably over 5, 10, 20 years, but certainly it's quite interesting looking at the industry over the last decade. 10 years ago, the buzzword was bank assurance, and now we see completely the opposite happening.
A pull away from those universal banking models, so to speak. Let's shift focus to the resources space today, because a big drag on the all-share index, as we saw earlier, and specifically gold miners coming under pressure on the back of a gold price that's been losing some momentum. How are you playing the resources space right now?
Typically, we play it not through gold. It hasn't been a favoured sector. We've just, it's well documented over time that those gold mining companies do not generate an economic return for their shareholders. So we've tended to avoid the gold space, but we're well positioned. We like resources generally, specifically the bulk commodities, things like iron ore, coal. So we have heavy exposure in things like Kumba iron ore, Exxaro, Anglos, the diversified miners.
What about a player like Wesizwe Platinum? Because we've seen that share price jump more than 4% this year as the junior miner finalized its financing package for 877 million rand, and that with a Chinese consortium. How are you reading that playing field?
Yeah, we've seen the junior miners and the exploration type companies, they're really ravaged over the last 2 or 3 years. I think Wesizwe probably had a high of about 12 or 13 rand, and today touching 2 rand. So it's still well off its highs. But I think there is value in that sector at the moment. But there's lots of question marks. Typically, these businesses need to raise capital at some stage, over the next year or two to fund the projects that they've got under their belts. And with that comes a dilution. So there's just question marks with regards to the ability to raise finance and the dilution that it's going to cause for shareholders.
And we saw that being highlighted by Platts very recently with its listing and getting hammered on its listing day specifically, where the attention was drawn to the fact that this is an exploration company, that it is at a very capital intensive phase right now.
Yeah, and that's the risk that you take with these businesses, and specifically if they haven't secured their mining rights, or their question marks over that, if they've been converted from old order to new order. So our approach in that space has to take the less risky approach and go for the heavyweights in the sector. And I think that's where the market is at the moment in terms of the way it's thinking. And it's likely to go for the heavyweights first rather than the second liners. Let's
take a look at the markets here. We've got investors seeming to be staying cautious, over the market's recent rapid pace of gains. I was saying earlier, we've had the Nikkei rallying about 12% since early November. We've seen US markets hit 2-year highs as well. When it comes down to it, I mean, we're simply looking at global markets picture that looks like it just needs new incentives to break higher before it convincingly does so, right?
I think there are a lot of incentives out there, and I think the picture is pretty positive. People can say the market's moved 15% in 2 months, but we must also remember that it fell 15% in the space of 3 weeks in August. But looking at the news across the board and the lie of the land, I think the fundamentals are in place to see the market drive higher next year. We've got very accommodative fiscal and monetary policy.
We've got positive data over in the US starting to filter through more often than not at this stage as well.
Exactly, very positive retail sales a couple of days ago, and and another fact which I've harbored on for some time is the amount of cash sitting on corporate balance sheets, and we think that's going to be the kick for the next phase in economic growth as those companies deploy that cash into manufacturing, buying business, more corporate activity. That'll in turn supercharge the economy and propel growth higher.